President Trump enjoying the backdrop of a very solid economy for tonight's State of the Union. This after that blockbuster jobs report I just referenced on Friday. For more, I want to bring in Liz Young, Director of Market Strategy for Bank of New York Mellon, also founder of Point Bridge Capital, Hal Lambert. Hal, I'll start with you. Let's talk about the economics of it all. The State of the Union, from an economic point of view, is pretty good right now.
Oh, it's fantastic. And, you know, President Trump's a great salesman. And those that come out tonight, the American people that watch, that have an open mind, I think are going to come away very inspired. He's going to talk about the lowest employment ever for blacks, Hispanics, Asians, the lowest unemployment ever for those. And it'll be really interesting, Charles. We talk about bipartisanship. Will the Democrats clap for that? Will they stand and clap? I think Republicans are going to stand and clap. What are they going to do? Are they going to sit on their hands, or are they going to clap for this economic boom that he's created? Well, so Trump's going to talk about that, and then he's going to go into bipartisanship, and just like your previous guest said, he's going to talk about infrastructure. I think he's going to talk about prescription drugs.
Okay, well, let's take one at a time then. I want to bring Liz in as well. Liz, let's talk about market reaction. If we hear tonight national emergency, what happens to the market tomorrow?
The market would not like that. If we're looking at the market and what the market is worried about, and even what the market was worried about in the fourth quarter, the biggest risks out there were we were worried about a Fed-led recession.
Right.
That risk has all but disappeared. Right.
And the candle on top was the steak dinner last night with, between President Trump.
Right. That was a positive.
Right.
That was definitely.
So we know that's out of the picture for now.
The fear has certainly abated on that front, and the Fed will continue to be data dependent, as they should be. Right. So now really the biggest risk that's left for the markets is trade, and we're going to be looking for comments on that tonight.
How we get comments on trade? It feels to me that a deal is right there. That something is going to. That China has made enough overtures that it feels like that's done. It's just now a matter of whether President Trump accepts what victory, what he wants victory to look like. What do you want to hear on that tonight, and how will that impact the markets, in your opinion?
Well, I think President Trump's going to be very positive tonight on the trade negotiations. I think it's in his interest to be positive about it, and I think it's possible they could reach a deal. The real issue is, will China be able? Will they be able to, comply with what we're trying to get them to do? Will they?
The market,
give the data
will the market
that we
be
need?
that? Will the market look into all those nuances of it, or will they just focus on a headline? U.S.-China reach monumental trade deal.
I think they'll focus on the headlines, and so I think it'll be very positive for the markets on the trade side. And by the way, on as far as the wall and national emergency, I don't think he does that tonight. I don't think he does the national emergency tonight. My prediction is I think he probably takes a trip to the border, and my guess is he's going to do something at the border probably rather than at the State of the Union.
Yeah, and it's unlikely that there'll be another shutdown. I mean, right? I mean, Liz, I don't know that it had a massive economic impact. I really don't, but I do believe the political toll was too much, and particularly as we head into 2020.
I think it had a brief economic impact. There's been this belief that the market likes gridlock, and that goes around as kind of a widely held belief, right, that the market likes that. The market historically maybe has, but everybody has a limit. And I think we got to that limit. I mean, it was the longest shutdown in history, right. And the market certainly
Well, the market was up during the shutdown, though, the irony of it all.
It was. Right. Well, and you'll hear a lot of people talk about, was that an actual recovery or just a rebound from what happened in the fourth quarter? Right. Did we overdo the fear, and now maybe we're overdoing some of this euphoria?
Well, then let me ask you about bipartisanship, then, because, again, to the lowest hanging fruit would be infrastructure. It would appear to be that if these two can get anything done, it would be infrastructure. The day that they announced tonight's address, I noticed the material names: Vulcan Materials, Martin Marietta Materials, United Rentals. They went through the roof. They did very, very well, and it feels like the market would love to see some sort of deal done, beyond the gridlock, some deals done with the emphasis on trying to create economic opportunity.
So the market has not had a shortage of things to be worried about, right? We certainly don't need to give anybody more things to worry about. And I think infrastructure, it's been talked about, but it's been completely overshadowed by some of these larger issues. Infrastructure is good for citizens. I think citizens would like to hear that there's going to be infrastructure spending. But when you bring it down to how do we pay for infrastructure spending, that's where it gets a little bit more dicey. But I do think that we should focus on the things that both sides can agree on, and that de-escalates that fear factor even further.
Where do you see the market going from here? I mean, we had that big move down. We've had more than a 50% retracement, and it feels like the bias has shifted to the upside. The communications services stocks are up, even though Google Alphabet is down, that kind of thing. It feels like this market wants to break out big time.
So first and foremost, we were calling for low to mid single digits in 2019. So I wouldn't be surprised if we pull back a little bit before we continue to go up and in a more slow fashion. What we want to see the market do this year, especially in some of these rallies, is to have more broader participation from other sectors. So last year, tech led the market
that,
up.
Right? I mean, I think we're seeing that.
Which is nice, because that then leads to a more durable rally.
When do you go back and sharpen your pencil? If we get let's face it, NASDAQ, not NASDAQ, the Russell's up 11% already. Right. So at some point, you may have to sharpen that pencil. We'll see.
We might.